There are plenty of bears out there who claim Cardano is basically worthless right now. It is hard for prospective investors who have decided to shoot their shots and invest to avoid being concerned. The Cardano price has been trending downwards since it broke through the $1 mark in March. But remember, the Cardano founder ascertained that something is coming special for Cardano this month. What is it? Well, here it is. Often dubbed as the Ethereum killer, Cardano has strived to improve the issue scalability which Ethereum lacked before the merge upgrade. 5 years down the line, its efforts have finally paid off, and investors seem to appreciate this emphasis. It is currently the 8th cryptocurrency by market cap and with a profound development process, which is characterized as slow and steady. So far, updates have been researched thoroughly and peer-reviewed before being implemented, and this is a process that is always delayed, but its improvements on the blockchain's growth is highly notable. Despite being seen as a tool for financial speculation, it is widely believed that cryptocurrencies and blockchain technology do have a future, but the ADA coin price has been on a downward trend, and there is no sight of a quick recovery. Is there at least one reason why investors should hold onto their Cardano investments? Well, the launch of the Cardano ecosystem's first regulatory compliant fiat-backed stablecoin, USDA, has been announced. Emergo, one of the developers and official commercial arm behind the altcoin, declared the launch of the project in 2023. With this development, analysts have been up to the task of checking whether this could imply a run-up in the ADA coin price. Fortunately, they have revealed a bullish outlook for the Ethereum killer. Emergo's fintech managing director, Vineet Bhuvanagiri, said, "The introduction of a fully fiat-backed regulatory compliant stablecoin is the next step in realizing the future for our community." Stablecoins are a token that is backed by an asset or a group of assets and pegged to a fiat currency, such as the US dollar. They serve as an entry to the crypto market for traditional market participants and are extensively used within the ecosystem as instruments for trading, borrowing, and lending. USDA is a part of Emergo's Anzen's product, a broader plan which will present several financial services and products functioning on Cardano-based assets to users. These plans include lending and borrowing services, crypto-based card payments, and bridges between traditional markets and decentralized applications. Cardano's stablecoin will be pegged on a 1-to-1 ratio with the US dollar. As a result of the FTX exchange collapse and liquidity crisis, stablecoins USDT and USDD suffered a temporary depeg, and this raised concern among regulators worldwide. The upcoming stablecoin is likely to tackle the concerns surrounding depeg and transparency problems related to USDT and USDC. Experts have repeatedly criticized the transparency of USDT reserves and collateral. Hence, the launch of a fully regulated and compliant stablecoin will garner popularity in the ecosystem. Following the launch of the ecosystem stablecoin, users will have the option to tokenize their USD into USDA through credit or debit cards, wire transfers, or conversion of ADA. Emergo also unveiled the plans to enable the conversion of other stablecoins into USDA after the regulation compliant stablecoin's launch. The commercial arm recently partnered with an undisclosed US-based regulated financial services firm as the banking partner to issue USDA and ensure that the stablecoin was regulatory compliant without disclosing the name of the company. This development could help bolster Cardano's DeFi ecosystem, which recently logged just over $53 million in value, an 82% slide since the March highs of over $300 million. The DeFi sector is one area that has always been a laggard for Cardano. After all, Cardano only introduced smart contracts to its blockchain ecosystem at the end of 2021, and has had little to no time to bring in new DeFi exchanges or new DeFi lending protocols. With this, Cardano could look more like Ethereum, which has a robust DeFi ecosystem. The ongoing complaint about Cardano includes the fact that there is not enough use cases for the blockchain, but as we close out this year, the complaint seems to be fading into thin air. Notably, Cardano pulled off a big technological upgrade in September that expanded its functionality and made it more developer-friendly. Cardano has also been making inviolable strides in the non-fungible token market, where it now only trails Ethereum and Solana. In addition, Cardano has seen rapid growth in the number of crypto wallets holding Cardano, which suggests its improvement in gaining traction with users, developers, and investors. According to some estimates, Cardano is now adding 30,000 wallets per week. So with the launch of a new stablecoin, Cardano will be further increasing its potential use cases. Cardano will become DeFi friendly, thus suspending the complaints of critics who constantly see no big deal about Cardano. Decentralized finance is typically the biggest driver for TVL for a blockchain. So if Cardano can get ahead of the curve, it could eventually start to attract some impressive numbers and change the mindset of potential investors. Currently, at its rock bottom price of 30 cents, Cardano seems to be a potential candidate for a late year bounce back. The TF Alameda has pulled a fast one on the prices of nearly all cryptocurrencies, and ADA has not been an exception. However, according to some evaluations, the bulls have successfully taken over the Ethereum killer. Edith Patrick, a leading crypto analyst, noted that the bulls had pushed Cardano's price up to 32 cents. Cardano started an early recovery since the altcoin was not among the tokens listed on the now defunct FTX exchange. Experts are now bullish on a rally in Cardano in light of the recent positive developments and announcements, and the ADA coin price could possibly skyrocket to $10 soon. Furthermore, after privacy-focused projects like Monero have failed to combat rising privacy issues in the blockchain industry, Cardano is preparing to launch a new privacy-focused blockchain. Despite the fast growth the digital world has seen, privacy protection remains a weakness. At an event in Edinburgh University, the founder of Cardano, Charles Hoskinson, shared that the company will launch a new token known as DUS to run this separate and privacy-targeted ecosystem. The company's new blockchain, identified as Midnight, is expected to be a better version of previous projects. The major goal behind the development of Midnight is to grant individuals, companies, and developers privacy and security, and equally serve them with fundamental freedom. That's a given. Unlike the previous privacy protocols, the newly formed blockchain features government authorities' involvement based on permissions granted by the system. Tech tycoons and crypto celebrities have always relished privacy products, while the government remains aggressive over concerns on how such opportunities could help bad actors move funds illegally. Charles Hoskinson said that adding privacy to blockchain projects was difficult, so it delayed the adoption of certain cryptocurrencies. Criticizing the previous privacy blockchain projects, the Cardano CEO admitted that Zcash and Monero use weird stuff like ZK snark signatures, which restricted the developers' efforts to modify the project's infrastructure as per the need. He also added that writing instructions in an understandable language like JavaScript enables experts to ensure privacy. Midnight has evolved privacy coin technology where everything was anonymous by default, which is what Zcash and Monero did with snarks and ring signatures. This is a completely new way of writing and running private smart contracts and private computation, so you can have a private DEX or go mine an anonymous dataset or these types of things, Hoskinson said. After a prolonged wait, the recent Vassal upgrade went operational September 22nd, and from Sentiment's report, development activity indicators reveal that additional features may still be in the works. The dev activity measures that has been on the rise since the end of October of 2022 and currently stands at 106. ADA does not seem to be doing too well. Based on the daily price movements, the asset has been on the decline, quickly giving up any gains that it has made in recent days. There have been minor surges, but the trade volume has been rather too quiet, and this is why Cardano remains a target for criticism, especially within the Ethereum community. A Bitcoin maximalist, Mike Alfred, recently took to Twitter to talk about his favorite asset to dump on. This time, the user mocked Cardano for having zero interest and value. He stated that the asset, which has already seen a massive decline, will continue to plummet over time. As a matter of fact, the tweet read, "Poor Cardano continues to languish away. No interest, no progress, no unique value for society. Seems like the devs are gone. ADA is sitting precariously at 31 cents and look poised to plummet down into the tens before the end of the year. Not too late to sell and move to Bitcoin." The VP of Community and Ecosystem at IOG responded to the tweet, lauding the Cardano community for keep it going forward. Hilariously, he responded, "Poor Mike continues to languish away. No interest, no project, and no unique value for Twitter. Seems like he is done. Meanwhile, an amazing Cardano community keeps building." Mike's own words were used against him, and since the ends justified the means, we'll just have to keep watching things to see how they unfold for Cardano in the near future. But of course, what are your thoughts on this? Let's have them in the comment section below. We'll see you in the next video, but before then, check out our other videos to find out how Cardano is living up to the dream of being the Ethereum killer. And as always, make sure you click on the subscribe and notification buttons.